Hi everyone, my name is Anne-Marie Band. Today is Wednesday, May the 21st, and this is the Moneyball Morning Report for the Benzinga Pro platform. What are we looking at? We're going to start with the ES today. On the docket, we've got a Fed speaker auditioning for their next role outside of the government, and we've got a 20-year bond auction, and that bond auction, it could be a little interesting. So 1 p.m. Eastern, put that on your alerts. Today we've got the EIA reports. Oil's on the move, and so that might get a little tricky. Okay, so that being said, let's take a look at the E-mini S&P 500. We've got an opening range that's almost 20 points wide, but just like yesterday, within the break of the low of the range, we've had continuation downside. So if today looks like yesterday, recent past is the best predictor of near-term future, we can see that we've got a high, a low, a lower high, a lower low. Here we have the beginning of the morning, lower high, breaks through a broad opening range. This was tight, okay? So we had the retest. So we broke through the broad opening range, came into, if I look across, we can see two prior days, May 13th and May 14th, where the Globex opening candlestick was at about 59.04. Eyeballs will tell us it's relative congestion, old support, and then support confirmed, and it started to bounce. So where's it likely to bounce? Well, two things. What's the slope of this moving average? It's up to flat. Suggestions are that we could move all the way into the opening range. So what do you want to do with that? All right, my thought is, how about we let it see how it behaves at the Globex high open of 3 days ago, and that number's 59.40. Now, if you're all hot and heavy about going short, because you think that's what's going to happen, you could take the short at 59.36. At that point, your stop would be about 59.44. So you got about 8-9 points. If you're doing that, hang on to a micro, okay? Because it is my suspicion that the traders try to, oh, look, it's a buy the dip event. And they try to get up and over this 59.49 to 59.54 area. That zone at 59.54 is where I like the short. Now, you got to let it reject. So what does that look like? Well, here comes 59.54. It bounces all the way up to 59.70, and then it rotates. So you've got to wait for the fails to hold higher and then breaks support event to get the trade. You've got an itchy trigger finger. That might take a minute, but that's what you have to do for this to work. Now, you could go, Anne-Marie, how can I take a long right there? Because obviously it was moving up, but clearly if I'm using my 1 hour chart, I'm not going to see any sign of that. Listen, when your eyeballs get close to these ledges that I have noted, that's the time that you collapse down. If you want to go to a 5-minute, you can, but you can clearly see on the 5-minute, it comes into that Globex low event, stops heading lower, breaks resistance, doesn't even pull back halfway into that candlestick and continues to the next resistance zone. If you're waiting on a trending event or a structure break, you want to look for this lower high to get broken, and you can take the trade at about 59.16. If you're a gunslinger, you could take it at 59.09 As soon as it gets above this area at 59.10, and your stop would be at the bottom. That's up to you. Your risk should manage how you engage in the trade. All right, now, what does the implied volatility say? Upper edge, implied volatility, 59.92.75. Lower edge, implied volatility, sometimes people call this an expected move. I might move it to that since everybody gets weirded out by the fancy words, implied volatility. But I want you to know how it gets calculated so you don't think this is some kind of mystical whatever. She's just adding some numbers together. That's the Globex Open plus what's in the implied volatility chain, and then minus that same number. So it's literally the range that it's going to sit in. And of course, you can see the traders going, okay, it seems reasonable that I'm going to sit in this range, so I'm going to sell these outer edges, right? Coming into the end of the day yesterday, this is the trade they put on for tomorrow. Okay, so here we go. Likely to bounce. My thought is up here. Remember, people are in a mad, crazy buy the dip space simply because they believe there's either a Powell put or a Trump put sitting out there somehow. And so they're pushing the edges, just like Evel Knievel or, a guy in a wingsuit. All right. Sorry, I took a long time there. I'm going to zoom through the rest. Let's take a look at the E-mini NASDAQ, right? If we stare down the mini NASDAQ, listen, Palo Alto, they barely beat, but they didn't masterfully beat, so they're down. Going to be a very interesting buying opportunity for those of us at the Midday Moneyball event. We got some great things planned there. All right? Okay, so here we go. If we're staring this down, what we're looking at is an opening range that's about 80 points wide, something like that, as the curve flies. What's happening? Yesterday, we broke the low of the opening range event after breaking the high of it, and then we continue down for the rest of the day. Here, we're sitting in a broad range. The Fibonacci for the wave event that I've drawn is, well, that's weird. It's right here, right? Now, I think that this is the wave that we need to use, right? Swing low, swing high, 50%, right? That's what the chart is after. It's after that 50% edge. I want to make these just a little brighter so we can see it. Okay, so they're breaking it. What's my thought? People are buying the dip. Not breaking it. Listen, there are a lot of traders that want to be short. They are. They are thinking that life is going to you-know-where in handbasket. Don't do anything but stare down these charts. For those of us that know the end of the book, not gonna matter what's going on here. So, that being said, what do we expect the traders to do? Well, we expect them to get back up over 21,356. If they cannot get up over 21,356 and stay there, price action will continue down. Okay? So, what is the implied volatility event? Upside, 21,582, which is higher than this wave, incidentally. And the low end is 21,242, which we tested just an hour ago. Okay? So the question then becomes, all right, if I bounced off of the range here, it's very likely that I'm trying to get to the top of the congestion from yesterday. The volume profile trader will say, hey, I've returned to range. Just a little bit further, I'll be up in value. And so that's where I think these traders are going to try and push it. up to the top of 21,422. So, what's the trade? I think it's range. Ideally, I would like to see 21,478 for a short, or a retest with some bullish momentum at 21,250 or so for the long, with a bunch of noise sitting inside of the opening range. Why? Because the moving average is flat. Okay? Long targets, nothing but air up here into the implied vol move up at 21,500, but they did stick it right there. And so if they cannot make a higher high in this rotation, we are very likely to break the low of the implied vol move and get down into the prior low sitting in this big range, right? Rejection of the 50. Could you say, well, Anne-Marie, I got a flat moving average. I could take the short at 21,358. That is the do or die line for the opening range trade. Yes, you could do it, but it better move quickly for you or you need to get out, right? You might make that a time-based trade if you decide, hey, I'm going to run this trade. I'm going to see if it holds 30 minutes, an hour. That's all I'll give it. And then I'm going to cut and run. Let's go to the YM. This pretty big move, okay? What is the wave we're looking at? It's all the way from back here. We made the structure break. It moved up 150%, and then it rotated right back down, so we're right inside of this old range. Let's shift the candlestick formation. Oh, look at that. Wouldn't you know it, 50%. You know, a lot of people go, hey, you use Fibonacci, you can't use 50%. That's not a real fib. Listen, we impose order on the market. It's got nothing to do with the actual calculation of the fib. It's what our simpleton trading minds go, hey, I'm buying the 50% of that trace. I'll do it. Listen, we traders that do this day in, day out for a living, we're simpletons. We try to buy the low, sell the high, and we expect if we move halfway through and we can't get through, then we'll move all the way through. Okay? So, there we have it. YM. This, I still think, is a really solid support zone. You notice it's not labeled as an expected move simply because they're not calculated quite that way. The calculation, way down here on the month, you can make boatloads of money, but you need size to sell these edges and wait for the rotation. So, what's the trade? Hey, you could try a long right here. 21,440. What's the trend? It's negative. Do we have reversion to the mean possible? Yes. That means our target would be 42,613. If we can't do that, we'll head right back down. So again, counter trend trades need to work quickly or they're going to likely fail. Okay? If you hold and hold and hold and hold sideways, trend is going to break by time and not price. Meaning you're going to hold the edge. It's going to look like one big candle. But that normally moves in the direction of trend. So either it works quickly, a la over here, or you get out of the trade. All right, upper edges 42,875. We have implied volatility spiking in a number of these commodity areas. Something's afoot. Can't tell what, but it is what it is. Look at the spike in micro Bitcoin. Monster. Who are we talking to? Market kickoff Coach Hoop said, hey, this thing is probably going to, I think he said 110, right? So I said, yep, first 107, 108, and then very likely 110. Now, what's the trend? Very strongly up on the hourly chart. Look at the dips that this chart has through its rotations. We have to shift the wave because we have a new higher high, right? And what that does is, what that does is give us a 50% rotation all the way down here at 105, 500, something like that, okay? We're back in the opening range. So could this be an event that gives us both a higher high and a lower low relative to trend? Possibly, or we can hold the expected moves. So look at how this came right into 1084. Listen, I don't just draw this line. I go do the math and then I plot the line. Comes right into the number and rejects it. Trend clearly up. Low implied volatility area 106,000. There we have it. Below that, the 50% is 105,340. Right in the opening range. Could it be sideways? Yes. Look at where it bounced. Right at the high of the Globex open candlestick, which it needs to hold, because if it doesn't, it's very likely to head to that halfway spot. So we're looking at a critical mass event here, watching how this price action resolves. Old support. So we've got swing low, swing high, lower low. If this short's going to work, it needs not to break out of 107. As I mentioned over the weekend on Market Kickoff on Top Step TV, what we are seeing is the option traders here who have been selling have been getting absolutely shredded doing their weekly formations because it will break to the downside and the upside. Right now, very wide range, but coming to the top of the weekly formation. So my suspicion is that it reverts to the mean, but I could be wrong. Where's the trade? Deep dips, 105,000. I would expect a selling formation up here at 108,000, but here's the thing, folks. If it sells for a second and still holds above 107,600 and starts bouncing again, cut and run. It is not a good short. It's going to be a continuation long, and we'll get into Hoop's 110 number. Right now, I think it's just in a big quagmire of let's see just how much of the last wave I can retrace. But notice the compression of the wave. Huge move here, 100% retrace. Half of that on the pullback, 100% retrace. Much smaller rotation, move to the upside, and now it's on the break. I have no idea which way this chart will go. Depends on liquidity, I would imagine. Let's look at gold. Volatility in gold continues to spike. I don't know that the planes bringing gold over here from London are still going. We do know that central banks continue to ramp up their buying in order to shore up their currencies. Okay, I've read a statistic that said 15% of China's gold is fake, meaning that they had these boxes and they just spray paint them and whatever. I have no idea how somebody would bring that statistic, but the bottom line is people continue to buy gold. It is in a monster bounce up. It did surprise me yesterday. I expected it to run into trouble at about this 3,280 area, and it did not. It did stay there for a bit. But again, if you have a trade long and it's in direction of trend and it stalls out, stay there. Because probability says a directional break is in your favor. Now, what are we looking at today? Well over the implied vol move for the week. $3,297. That's the big edge. We're well over it. Today's implied vol is expanded outside of the range we measured at the beginning of the week, and it's now at $3,318. We have a little bit of a topping formation here. Do you want to go short? You could. That's counter trend. And if you took it short, your stop should be right at that implied vol move at $3,318. If you took the short here at 33.10, what would your target be? Well, your target would be the bottom of the opening range, which is 32.94 or 32.91, excuse me. And then potentially we get to 32.71. We are very extended from the 63 moving average. Look at that rotation. It's rotated right over. Easily we could fade into the mean, but we could also easily jam ourselves up into 3,346 and then 3,367. I say wait for the dips and move in the direction of trend. If the dip is going to be deeper, it's not going to hold $3,290, step out of the way and wait for it to rotate into the buying areas. If you want to short it, you've got to wait for a 1, fails to hold higher, 2, break support, 3, bounces and still does not breach the high. That second candlestick right there would be the region we would open the short and the stop would be the high. Okay? And that would mean you would use the micros because that's still a fair bit of risk with the stop being up at $3,323. My thought is they're buying. Sideways, 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 bang, to the upside. So I would not be doing any shorting if I were you. Let's just put it this way. I'm not doing any shorting. How about that? Okay, SPY, opening range. This is, about 60 cents wide, bouncing. Why? Because our trend is up, and anytime we pull back into support, and then we bounce. The question is, yesterday, we pulled back underneath the 63, broke through it, retested it with some wonky wicks, and off to the races. Today, what do you think we'll try and do? Same. Get ourselves to the top of the moving average and try to head over. Here's the thing. As you look at this, if we cannot fill the gap and get up over $591.70, we're going to rotate down. Momentum is negative, and so bounces should be sell zones until we make a formation that gives us higher lows. So what does that look like? Bounce into resistance, pulls back, and maybe we make, inverted head and shoulders here, which means that our pullback into 590, 50 or so could be a buy zone. What does this tell us essentially? That we're in a sideways mosh pit, and we either need to wait for resolution to the upside or take a bet that that's going to happen, which, might be a coin toss. So size your risk appropriately, or we move down, right? We are still inside of the weekly formation, still inside of it. And so the range, pretty wide. Option traders are thinking something very interesting is on the horizon, or volatility spiked into the last week and they're just clamoring. But something's afoot, right? We're going to see a bigger move somewhere. So prepare yourselves for it. I don't know where it is. All right. Qs. Opening range, what's the edge of this? Opening range, maybe $1 and some change, right? Something like that. All right, so what's the trend? Up to flat. What's going on right here? Mean reversion back into the swamp, right? Let's move this fib and let's take a look at the last big, oh gee, that's such a mess. Look at this. All right, look at how long we've been sitting in this range. Since May 13th, today's what, the 22nd or something? Or 21st. All right, somebody's birthday today and I can't remember who. Don't you hate that when that happens? When you're like, I know it's somebody. I'm missing it. Okay, right here, swing high, swing low, 50% range. What are we doing? Battling against it. Have we made a lower low? Yes. Bounce action should give us some selling. Now, sideways to up moving average. Range is tight. Look at how tight the vol markers are. Super tight. So we could be compressing again today. Highs, take the short. That's $520.84. Lows, anywhere between 514 and 512 because of the mess right here with this structure break. We go long. And then we revert to the mean. Okay, that's a great big bounce. We'll see what's going on. All right, that's it for me, folks. We've got Midday Moneyball today and lunchbox trading on Top Step TV. I sure hope to see all of you. And stay frosty, friends. It's either the light at the end of the tunnel or an oncoming train. All right, be well.